A+ലേക്കുള്ള വഴി ഇനി തനിയെ തുറക്കാം. Subscribe to the ENCLAPS channel. Ring the bell button and open success. It's that easy.
Hi. Today let's learn about commercial banks. Commercial banks are the oldest banks and have many branches. These banks play a major role in the country's financial activities. They accept deposits from the public and grant loans to trade, industry, agriculture, etc., subject to certain conditions. There are two types of commercial banks: public sector banks and private sector banks. What are these public sector commercial banks? They are fully government-owned banks. Their functions are controlled by the Reserve Bank of India. State Bank of India, its associate banks, nationalized banks, regional rural banks providing local banking services, etc., together constitute public sector commercial banks. But who owns the private banks? Private banks are owned by private individuals. However, they operate under the control of the Reserve Bank. Private foreign commercial banks are important among the private banks. Private foreign commercial banks are those banks which have registered in India but have headquarters in a foreign country. Let us now look at the functions of commercial banks. The main functions of commercial banks are to accept deposits and to provide loans. Commercial banks accept deposits from the public, then pay interest on the deposits. Four types of deposits are accepted by commercial banks. They are savings deposit, current deposit, fixed deposits, and recurring deposit. First is the savings deposit. This scheme helps the public to deposit their savings. Banks provide low interest rate for such deposits. The depositor can withdraw the money from the deposit subject to restrictions. The details of the amount deposited and withdrawn are stated in the passbook provided by the bank. Second is the current deposit. This deposit facilitates depositing and withdrawing money many times in a day. Hence, such deposits do not receive any interest. These deposits are used mainly by traders and industrialists. Then the third is the fixed deposit. Fixed deposits are ideal for depositing money in banks by individuals and institutions for a specific period of time. The interest rate is calculated on the basis of the time period for which the money is deposited. If the money is withdrawn only after the completion of specific time period, then the specified interest rate will be provided. For example, suppose a certain amount is deposited in the bank for 3 years. If the amount is withdrawn after 3 years, the interest will be paid at the fixed rate. But if the amount is withdrawn earlier, the interest rate will be reduced. Then the fourth is recurring deposits. Recurring deposits receive a specific amount every month for a specified period of time. The interest rate of recurring deposits will be higher than that of saving deposits, but less than that of fixed deposits. Another important function of banks is providing loans. Where does the bank get the money to lend? The bank lends the amount received as deposit from the public. Banks provide different types of loans to individuals and institutions. The interest rate of loans will be higher than the interest rate of deposits. There will be differences in the interest rate depending on the duration of loan, its purpose, etc. When providing loans, as a security, banks accept some collateral. Physical assets like gold, property documents, fixed deposit certificates, salary certificate, etc. are accepted as collateral. The loans given to individuals and institutions by accepting such collaterals are called cash credit. If so, for what purposes do banks lend money to people? Agricultural purposes, industrial purposes, constructing houses, purchasing vehicles, purchasing home appliances, educational purposes, etc. In addition to cash credit, banks also offer other loans, that is, overdraft. It is an opportunity for a customer to withdraw money over and above the balance in his or her account. For example, a person has rupees 10,000 in his bank account, but he needs rupees 15,000. He borrows an extra rupees 5,000 from the bank. This rupees 5,000 is the overdraft. Interest on the additional money will be charged. This facility is provided to individuals who have frequent transactions with the bank. Generally, this opportunity is provided to individuals who maintain current deposits. Hope it is clear about the various services of commercial banks. See you later.
3 ലക്ഷത്തിലേറെ വരുന്ന ചോദ്യോത്തരങ്ങൾ ഏറ്റവും കുറഞ്ഞ ചിലവിൽ സ്വന്തമാക്കുവാൻ ഉടൻ തന്നെ ഡൗൺലോഡ് ചെയ്യൂ എൻക്ലാപ്സ് ദ ലേണിംഗ് ആപ്പ്.